From the floor of the CME Group, this is Danny Riley with today's mid-morning update. And the name of today's video is going to be the S&P 500 and Troubled Waters. Now, I want to remind everybody that these are not our father's markets, and nor are these his boards or charts. Everything that we used to know is no longer. Everything, the computers have completely taken over this stuff, and I think Friday was a big example of that. The S&P was closed down 2.6%, or down 55 handles, and then yesterday, Monday, was up 1.73%, or up 35 handles, and right now the S&P is down 25 handles on its low of the day this morning, down at 21.25 even. Now, look, this has been a long time coming, and the fact of the matter is that you've got a lot of different moving parts here. Now, the first part about it is that the Fed has run out of bullets. I think that that's what's got everybody kind of spooked. Behind the scenes, despite talking about raising interest rates, everybody knows you can't lower interest rates anymore, and the positive effects of the quantitative easing that's been going on around the globe is starting to wear off. There's just, the Fed has very little tools left in their toolbox. Now, we've been very adamant about this. We thought that the S&P would hold up into the sub-quad witch, but we also explained that sometimes that doesn't work out real well, and that's not working out so well this week or this morning. But that doesn't mean that it's just going to go straight down. Now, the big thing that I've been concerned about isn't just getting through past the September quad witch, but it's also the end of the quarter rebalance. I think there's a big rebalance coming here. And if the stock market does actually start to Columba to the downside, there's going to be a real lot of rebalancing at the end of the month. Now, look, this is a long time coming. The credit crisis low was set in 2009 at 666, and since then we've basically gotten up to 2195 and very close to 2200 in the S&P. But at the same time, there's been no pullbacks. After that Brexit 1981 low, the S&P rallied at about 215 handles with very little pullbacks. And now we're finally getting it. The downside is loaded with sell stops. And what I'd be concerned about today is if the S&P does start to slip under 2110, these sell stops are very big from 2110 all the way down to 2080. Now there's support down at the 2060 level. Now I don't want to get ahead of myself, but at the same time, we all knew that this was going to happen at some point. And whenever so many people are wishing the market lower like they are right now, it becomes a foregone conclusion. In fact, Ray Dalio was just on CNBC talking about it, and as he was talking, the S&P was he was not talking very favorably. But as he was talking, the S&P was just notching lower. Now we just got down, we just traded down, back down to that 2125 level. We've got a double bottom here, but we've got a long day ahead of us, and I suspect that we're going to have a lot of up and downs, but mainly I'm worried about the downside. So we're going to leave it like that, and I will be back on the final 45 on Periscope almost every day, or I'll do another video tomorrow going into the cash close, so you guys know where we're at, okay? But again, very troubled waters here, big volume. We're only about 30 minutes into the session. We've already got 500,000 minis traded, and I suspect today will be a big volume day. We'll leave it like that. We'll see you tomorrow on the closing print.